Hey everyone, and welcome to the PivotBoss Closing Report for March 17th, 2016. I'm Frank Ochoa, aka PivotBoss, with analysis after the recent session. We've seen a significant squeeze event here so far ever since price came into the 1959 half. That was our primary idea. Once price pushed up and pushed into 2000 initially, we were looking for a pullback into the previous month's high for a shot at defending that level and seeing a further squeeze, likely into the primary upside target for the month and then into the secondary target, which is 2061's the HVN. So far, we've seen a steady continuation so far to the upside. The pullback has been defended at 2000, and we've seen a further squeeze higher, reaching the primary target for the month at 2025, and we could see further upside ahead. Remember, this 100% target right here is an average monthly range target, which means from the March low here, if you add up the average monthly range and add it to that low, you're going to see this as the 10-month average range. So there's plenty more room left to run to the upside into this target, as we got a couple more weeks left in the month. Overall, pullbacks into 2000 should still be defended for a continuation higher. And even if price reaches 2061, 2077 is the top of the key range that we've been watching there. And that's going to be very, very important to watch as well. So right now, look for further overall strength to the upside short term toward 2061. Pullbacks to 2000 should be defended. If we look at the intraday time frame here, you can see how bullish this move was for the most part. And you can see here we had a key range that formed in overnight trading, 0575 to 27 quarter. Price finally saw a shakeout from that range and rallied to the upside, pushed to the top, came back to the top of the range and was defended and continued squeezing higher very nicely. So I would say right now 2026 very important. Pullbacks to that area likely to be defended for continuation. Failure to hold 26s opens up a potential push all the way back toward 2016 and perhaps 5-day VPOC. Overall, continued strength should be seen. If we take a look at crude oil here, crude oil has been fantastic, nearly reaching our final destination target here. What we've been talking about was how price rejected off this low and the bottom of this range. The implication was for a return back to the midpoint of that range, 34.63. That was reached rather quickly, and then for a follow through into 40 half. 40.50 is the next upside key level, and we've come very close to hitting it. This after seeing a bounce off of our 36 key level here. That's what we were looking for. As price pushed up through this level, when it came back to this area, we talked about bulls defending 36 for a squeeze higher into 40 half, and so far that's played out perfectly with a 4-handle rally and only about a 4-tick adverse excursion. So just a phenomenal bounce off that 36. We want to see how price responds now once we reach 40 half here. 40 half is going to be very important. Any failure to hold above that level could open up a return and a retest back at the HVN at 37.97. So watch prices at and just above 40 half for signs of a rejection. Pushing through 40 half opens up the next upside target at 43.43. Taking a look at the intraday time frame, this was pretty important here, how this played out. Overall, what we were looking for was how price was coiling up today. That was during the trading room. We were looking for expansion from this range. Once price pushed through the IBH here, it rallied higher, and pullbacks were defended all the way into 40.23's, the 100% expansion target for the day, ADR target. So very, very solid continuation. I would say right now pullbacks likely as low as 39.5, but into 39.75. That zone right there could offer a buying opportunity for a continuation higher into 40 half. All right, taking a look at gold. Here's the intraday for gold. Again, what we looked at before was how price rallied significantly out the tightly coiled range here. We knew some fuel was building up, and we've seen the expansion. This move took us right back into 1272s, and again, what I mentioned before, prices having trouble above 1272s, and a failure to hold above 63.90s could open up a return back toward value at 1232.60. So what you saw price come into this zone, fail just at the 1272s, came into the 63.90s, tried to hold, and then the stops came out. You've seen since a continuation lower. So right now what I would look for is any bounce back into 63.90 or perhaps even into 68s should be defended for a push back toward the 2051s. That's going to be your previous week's close. So right there, that's going to be the overnight idea right now. Any push higher into the zone could be sold for a return into 2051s and a shot at seeing a full-on continuation back to value at 1232.60. That's the early idea. Pushing back above 1263.90s would imply a retest of 72s and continue to watch that level, because any failure to hold above it marks another rejection. Let's take a look here at the NQ. The NQ continues to push higher. This one's a very quiet day comparatively with the ES. But nonetheless, price pushed through the 43.55 key level eventually, has made its support, sitting above that zone. I would continue to watch this area up here. Any failure to hold above 43.55 has a shot at returning price back toward 4,200, 4,220. But right now, I think pullbacks have been defended. You kind of see a little bit of a channel that's developing like this. So right now, 4,300 is probably the area to defend. It's also the previous month's high. So price pulls back into the area. This zone could be a nice continuation higher. Overall, any push through 44.12 opens up 45.01 to 45.23 as the next major targets above. All right, let's drop into the lower time frame here. On a lower time frame basis, you can see the key level that we've been watching here. This key range from 43.59 to 44.12. You have a midpoint here at 43.86, and price just traded within the boundaries of that overnight range. Very, very low probability that happens, but it happened. Very tightly coiled price action. And that tells you right there that significant expansion could be ahead, but watch the boundaries of this range. I think 43.68s continue to hold. Bulls continue to defend that level. So if price drops, this could be an area to defend for a rotation higher. And beyond 44.12s opens up a push into 44.39 with a shot at seeing 44.65. So there could be more upside ahead. Any failure to hold above 43.68 could open up a return back toward 43.30 and 43.00. 43.00 being a higher time frame area for bulls to defend as well. All right, that's it for now. Let's see how this thing plays out heading into Friday's trading. Good luck and trade well.